GCC countries that have not yet implemented VAT, what would be your advice in terms of them starting and getting ready? In our experience, the biggest mistake, or rather the biggest risk, I suppose, is that we've seen in Saudi or Bahrain, is that customers left everything too late. I mean, from a tax automation point of view, it doesn't matter what the tax rate is, what data is being interfaced in, and what items are going to be exempt. What matters is that you can determine a tax rate, add a tax line to an interface, or change the determination based on the items that you're actually selling. You know, you can do the correcting everything after you've got the final legislation. So in your opinion, when do you think companies should be starting? You know, what should they be doing now? So, for example, in Oman, what should they be doing now to get ready before the final legislation is released, or even even the draft legislation is announced? You know, what they should be looking. You know, should they be looking at the existing GCC countries as a guideline to actually start the work?
It's an extremely interesting question, and I think it depends on the size and the complexity of your business. I think a good rule of thumb should be 6 months, which means that for some of the other countries, GCC countries, that is now. I think why 6 months? IT implementation, which would be Innovate Tax's bit of the implementation, takes a lot of time. Preparation, implementation, configuration, testing, and so on. The bit prior to that, where we often come in, is, okay, let's have a look at your structure, let's have a look at the types of transactions that you're doing, and let's have a look at the impact of VAT overall on our business and how to potentially mitigate against the adverse consequences of this. I think in terms of looking at the UAE and Saudi, I think a lot of businesses underestimated the impact of the introduction of VAT, the work that it would trigger. You can tell it from the type of questions that we still get from clients right now. I think some of them were well prepared. Other businesses underestimated the impact. Even the ones that were well prepared, they always run into things which they didn't think of. And I think that's the key message. You need to plan ahead. You need to plan very well ahead as much as possible. There's still going to be little details which aren't, which you didn't think of, but which you can always tackle later on. But I do think time is of the extreme essence.
And this is where they should be reaching out to companies like Orifa and obviously Innovate Tax to ask them, you know, based on our experience, you know, our extensive experience, what they should be doing, because I would assume that we can cover a lot of the areas that they haven't got the experience in.
Yeah, I think looking for. So in selecting your advisor, I think the track record is extremely important. Businesses that have done the implementation in the UAE and KSA, by this I mean businesses that have assisted other businesses in the implementation in UAE and KSA, they are worth a lot of money because they're worth their money in terms of the services that which they will bring, the experience that they will bring to the table. I think it is highly important. It's a matter of not leaving it up to only the accounting department, engaging also the other departments, the IT department, the finance department, the legal department, and taking it broader, because the impact is much broader than just having to account for VAT.
Great. So definitely the advice is to start now, get the right advice, and you'll be in a much better position when the actual time comes to go live.
Yes.
Thank you, Thomas. Thank you very much for your time.